Now that the debt ceiling is back on the table and it looks like we're not going to come to a resolution, what exactly is going to happen to stocks next week? The consumer's more resilient than we expected, but they are pulling back, and now we've got all this volatility ahead. When we were headed into this week, we wanted to know what the status of the consumer was, so we were looking forward to the earnings from Home Depot, Target, and Walmart. And we also knew that the debt ceiling could be a problem. When Home Depot reported on Tuesday, everybody kind of freaked out a little bit. Home Depot reported a good quarter, but its guidance showed that demand was going to fall off a cliff, and that just freaked everybody out. On Wednesday, Target reported earnings as well, and they had a good quarter. They maintained their guidance for the full year, and they did note that it looked like the consumer was pulling back on discretionary spending. Walmart, the big behemoth, came out and blew away earnings reports, and even raised guidance for the rest of the year, claiming that although it did look like the consumer was pulling back a little bit on discretionary spending, they were proving to be more resilient than was expected previously. So consumer sentiment is a mixed bag. It looks like it's resilient, but then again, consumers always look resilient right before we head into a recession. So it's kind of up in the air what all this data means. When we're talking about the debt ceiling, it looked like everybody was getting along. Speaker Kevin McCarthy and President Joe Biden both came out and said that the negotiations were making progress. But like Charlie Brown and Lucy playing football, on Friday the Republicans decided that they would pull out of the negotiations and claim that the White House was not being reasonable. That means the debt ceiling is back on the table and we've got a 1-week deadline. Next week is the last week where Congress is going to be in session. So we need to get this resolved, otherwise we're going to hit the deadline Janet Yellen says is coming up on June 1st. So what's the bull case going into the next week? With the consumer stronger than feared, it looks like the economy might be holding up in face of all the Federal Reserve's interest rate hikes. Additionally, Fed Chair Jerome Powell came out on Friday and he said that it looks like we might not have to raise interest rates much more than they actually are right now in order to fight off inflation. So that's good news. Also, bullish analysts will point to the fact that many institutions and many retail investors have significant piles of cash on the sideline because of the good interest rates they're getting. However, if the stock market continues to rally, that could be enough to draw FOMO from these people and they could pile into the markets. There are literally trillions of dollars sitting on the sidelines that aren't invested. If that money starts to flow into the markets, it could cause stocks to rally even higher. So the bulls believe that an all-time high for this year might actually be on the table, that the S&P 500 could actually beat its all-time high from January 2022. However, the bears now have that debt ceiling back on their side too. And they're arguing that we're going to see a lot of volatility next week. Additionally, a lot of bears still believe that we're headed into a recession, and that the Fed may actually still raise interest rates in June since it looks like the consumer is strong, as is the economy. And if the stock market keeps rallying going into June, that's another factor that might make the interest rates go higher when the Fed meets. Additionally, next Wednesday, we get the meeting minutes from last month from the FOMC. The minutes that we got last time showed that the staffers feel like a recession is due, and this is one of the first times they've ever said that. If we see a surprise like that going into next Wednesday, that could also throw the markets for a loop. You've heard me say that it's important to have a plan for both directions. What are you going to do if stocks go up tomorrow, and what are you going to do if stocks go down tomorrow? But just because you have a plan for both directions doesn't mean you shouldn't know the bullish and bearish narratives going forward. As long-term investors, we need to keep track of what might move stocks higher and what might move stocks lower. And the way I do this is by listening to so many podcasts and watching so many shows and reading lots of articles every week that I'm in touch with both narratives. I've listed some of the content that I listen to in the show notes of every episode below in case you want to follow along too. It's important for us to know what are the upside targets and what are the downside targets. Additionally, you should always buy into weakness and sell into strength, and this means you sell the pops and buy the drops, not the other way around. You should never FOMO into a rally or panic into a systemic sell-off. If you'd like to learn more and follow along with my own moves, check out my website getirked.com, which is always 100% free. Please hit like and subscribe, it really does help the channel out, and I'll see you in the next video.